screen share first, and then I'll open the video for everybody. So let's let them in. I'm sorry. Okay. Hello, everybody. Thank you guys so much for hopping on. If you can hear me, go ahead in the chat and let me know that you can hear me. Just drop a 1 in the chat, and that's going to let me know if you can hear me or not. And you should be looking at, let's see, we have 2 more people that are trying to get in. You should be looking at the initial screen that says private investor meeting. Okay, I see a few people in the chat that indicated they can hear. Hi, Lavette, how are you?
I'm fine. How are you?
I am good. Thank you for joining us.
Thank you for having me. Thank you.
Yes, absolutely. Okay, James, how are you?
Hello, Miss Edwards. How you doing?
I am good. Thank you for joining. Nikki, I can see you here. Can you hear me? Let's see. I will unmute you or send you a thing to unmute. Can you hear me, Nikki?
Yes, I can hear you.
Awesome. Thank you for joining us. And who else do I see? Cedric, how are you, Cedric?
Good. How are you?
I am good. Thank you for joining us. Let's see. We have Carol on. Carol, how are you?
Doing great. How are you?
I am good. Thank you for being here. And Jaden, how are you?
I'm doing well.
Thank you for coming. Anthony, how are you?
I'm doing very well. Thanks for having me, Tanya.
Thank you for joining. And let's see, Courtney, how are you?
I'm doing great. Thank you.
Awesome. Awesome. Thank you so much for joining. So we're just going to give maybe another 2 minutes or so. We had about 15 people that indicated they would be on the call. And so just in the progress. I'm sorry. I'm going to mute everybody. Okay. Okay, so I muted everybody, but you can unmute yourself when you want to speak. So we had about 15 people that indicated they would be on the call. We'll wait another minute or two, just in the interest of respecting you guys this time, but also giving them an opportunity to get on. I had a few people who were a little confused on the time. They confused the central time and the other time zone. So we are central time. I did speak with 2 people who were outside of central time, but they're on the call. One is on the call and we're still waiting for another. So we'll just give it another minute or two to give them an opportunity to hop onto the call. And during that time, I have a little motivational video that I want to share with you guys. Let's see. And I will share that in just 1 second. Let's see here. All right, you guys, tell me if you can see my screen here in just a few seconds. Let's see. And let's see.
Can you hear it on your side, Tanya?
I didn't hear you.
I said, can you hear it on your side?
Yes, can you guys hear it?
Why are you scared?
Oh, I can now.
All right. So I'm going to close that down and we can go ahead and get started. Can everybody hear me? Okay, Courtney could not hear the video. Was everybody able to hear the video?
I couldn't.
No.
Nobody could hear it?
No, ma'am.
No.
No.
Oh, wow. That, that is what my kids call an epic fail.
It's operator error.
Yes. But you guys could see it, right?
Yes.
I will send it to you because it was really good. You had to hear the inflection and the emphasis and the voice and everything, but it's really a good video. That is so funny to me. Okay, so I don't think we have anybody else in the waiting room. I'm just making sure if we do, then I will let them in. Let's see. Let's just make sure. So far we don't have anybody else in. We have about 10 people on right now. So we'll go ahead and get started. You guys, that video was a video of the individual that's going to be the first one to share with us. And I'll let him talk to you guys. But before we do that, I just want to welcome you to the first private investor meeting. I'm excited to share my vision with you and the incredible opportunities that are ahead for Fertile Ground Investments. Your partnership is extremely key as we continue to transform communities through our new and ongoing projects. Together, I believe that we can all achieve great things and create a lasting impact. So I want to thank you first for your time, for your trust, and for your interest in being a part of this journey. I put a little quote here and it says that success is not final. Failure is not fatal. It is the courage to continue that counts. Okay. So first person up that we're going to have is going to be my son, Jaden. He is a general contractor in training. Right after him, Carol Brown Young is going to come up. She is a new investor. Then we're going to hear from our builder, Anthony Davis, who's also a GC. And then we will hear from Courtney Campbell, who is a former and existing investor. And I will come back on and wrap up the call with you guys. Does anybody have any questions before we move forward? And if you do have questions while we're going, you can drop them in the chat box and I will be sure to answer. But for now, does anyone have any questions? Awesome. So we will get started first with Jaden. He's going to talk about legacy. And again, Jaden is a general contractor in training. Jaden, could you unmute yourself?
Yeah, y'all guys can hear me, right?
Yes.
Well, to start off, my name is Jaden Edwards. I just graduated May of this year. After my mom introduced me to the business, I had a choice to go to college or start making money sooner than later. For me, it was an easy decision because I have a young 8-month-old son. Therefore, I decided to start the general contracting classes. Before I started my classes, I was trailing my mom to see if it was something that I wanted to do. And truly it is. And we're on the 3rd week of classes and I'm really enjoying it right now. My plan is to start building my first house before I turn 19 years old. And it would be good to know that I'm helping you guys flip your money while you guys help me continue my legacy.
Thank you so much, Jaden.
No.
Awesome. Okay, so next up, we are going to hear from Carol Brown Young, and Carol is going to share with us just her what made her get to this decision, how we came about her becoming an investor, and how she feels so far. Carol, could you unmute?
Yes, ma'am, I just did. Hi, everybody. My name is Carol. Let me start just by saying I'm happy to be here. I love to get educated. I met Tanya. What'd we say, Tanya? How long ago? How many years?
Whew, it's been maybe 7 to 10.
Yeah, I don't know if anybody's heard of that MLM company, but I can't remember the name of it. TLC?
TLC.
TLC. We met selling that stuff, and we've kind of been friends ever since. And I respect Tanya greatly. She's a go-getter. She's an entrepreneur, and we throw ideas back and forth. We don't talk all the time, but when we do, it's usually a lengthy conversation. And because I feed off her, she feeds off me. But I've had my real estate license since 2003. I let it go in 2008 and then got it back in 2014. Selling real estate for me is fine and dandy. I don't have patience for buyers. Listings aren't too bad, but what I really would like to get into is in the investing side. And I did a kind of like a fix and flip, not anything extravagant, for a friend of mine. Actually, it was my boyfriend at the time. He had about $10,000, and I pretty much turned that house from looking very badly, as Donald Trump would say, to this amazing. It was great. Everything looked brand new, and I did it with $10,000, and I really really enjoyed it. Now, I want to get into the flips and stuff like that, but when Tanya called me about the opportunity to be a private investor, I'm like, well, until I'm ready to do the fix and flips, why not make a little money with some money I already have in the bank? And so I like the idea of a great return on an investment. And so this is why I've been talking with Tanya to invest with her. I do trust her. And I know she's got a savvy business mind, so I'm not worried. And I'm also looking forward to seeing, once I do invest with her, I'm probably gonna end up asking more questions and getting more involved. And who knows, maybe I'll be building a house one day too. That's about it.
Awesome. Awesome. Thank you so much, Carol. And guys, just so you can know, we will have a Q&A session at the end. Next, you guys are going to hear from Anthony. Anthony is our builder, Anthony Davis, and he's going to talk about what investing looks like for you guys. So Anthony, if you could unmute.
Can you guys hear me? All right. I am going
Yes.
to try to, I'm trying to share, give me permission, please, Ms. Tanya.
Oh, yes, yes. Let's see. Now, how do I do that? Think. Okay. There was that. And you should be able to share now.
Yes.
Awesome.
All right. Can everybody see my screen?
Yes.
Okay. So I appreciate having the opportunity to come and speak to everybody who's on the call. Being a builder affiliated with Fertile Ground Investments is a great opportunity, not only for me, but everybody who's on the call. I've had an opportunity to get to know Tanya over the last 6 months. We actually built a house together over in Dallas County. Her and I went through that process in about 4 months, and I believe that she wants to continue to repeat the process with her potential investors. So what I wanted to do is, one, just show you guys how she sources property, Second, how she puts together her investment strategy. And then last but not least, how she actually budgets for these projects. So this is Build Construct Pro. It's actually a proprietary software that's used by our group of builders. Tanya is actually currently a part of 177 builders that have been planted throughout the Dallas Metroplex. And we work together collectively as one community or one cohort. We share a number of resources. We share all of our trades. We currently have 378 trades, from plumbers to your electricians, your HVAC guys, everybody that it takes to build the house at different skill levels. So every resource that is necessary for us to be able to put together a turnkey system for our clients and also our investors are presented here. I'm going to go into 6203 Kimrock. And this is a project that we're currently working on. The very first thing that we do before we take any investor's money is we first want to make sure that we have a buildable lot, that we're not going to be stuck in permitting for a long amount of time, and that you guys have to try to figure out if your money has been deployed in a good investment. 90% of new construction being successful is about picking the right piece of land. So right here from our app, she's able to verify the correct zoning. So this one is a R5. And all that means is that that lot has to be a minimum of 5,000 square feet. It is not in a floodplain. We've noticed that a lot of investors who get into these deals, they find out that they have a piece of property that's stuck in a floodplain. It can cost up to $15,000 just to get the city to take a look at that. But it still doesn't mean that you're able to build. So we always verify that the lot is not in a flood zone. And then we're able to make sure that the lot is big enough to accomplish whatever it is that we're trying to build. So on this particular one, we have 7,113 square feet, which is 63 foot width. So it's 63 foot wide and it's 120 feet deep. So this is definitely large enough for us to bring a pretty good sized single family home in Dallas County. The other thing that she's going to verify is that it's platted. We do not want to get stuck in a replatting process. That can take 6 to 8 months, and it can cost you anywhere between $15,000 and $20,000 in the city of Dallas. So we do want to make sure that the land is platted and that we can build within right. The other thing that we look at is deed transfers. How often has the land transferred? How often has it moved hands? If we're seeing that land has moved transactionally a lot within 12 months, that usually raises our eyebrows, and there's red flags that we start to look for, especially if we see that it's builders or developers that are trading that land back and forth. So according to all the zoning requirements that we've researched above, yes, this does meet the zoning requirements in order for us to move forward. Then we get into the zoning and planning side of it. So we go check all of the setbacks, we check our building heights, we check our max coverage to make sure that we're able to build a product that's going to sell in that area. The last thing that we do is we actually drive and do all of our visual checks. So is it new construction on the block? We don't want to be the first person developing inside of an area, taking a gamble, but at the same time, is it oversaturated? Are there too many builders that are building in that area? And are those homes sitting on the market longer than we want to see? Are these homes on either side of your lot? The reason why we look to see if there are homes on both sides of the lot when she drives by is just to quickly verify, is there a good chance that there's utilities? If the house to the left of me has utilities and the house to the right of me has utilities, it shouldn't be an issue with me bringing utilities to our site on this infill lot. We look for fire hydrants, manholes, water meters. We're looking for any type of historical street views that we can prove that a house was once on that lot and we can prove a buildable site. Any type of abnormal topography. Are we going to have to bring in a lot of dirt? Are we going to have to get rid of trees? Are we going to have to bring in a retaining wall or a water culvert? All those things are going to be taken into account on the front end before we even come to any investor to ask them for monies. And then the last thing that we're going to do is do a quick underwriting of this project just to make sure that it cash flows. So on 6203 Kimrock, we plan on selling this for $360,000. The high end comps came in at $385,900. On the low end, they were coming in at $349,000. The lowest on square footage was 1,800, and then the max was 1837. So our target living square footage needs to hover around 1,800 square feet. To be competitive, we want to make sure that we're building about 110 a square, and we paid $58,000 for this lot. With a 4% commission structure going out to our realtors on what we negotiated and 1.5% in closing costs, if we're able to sell this at $360,000, then she'll be walking away with potentially $69,830. This is what she does on the very front end before she even comes and speaks to any investor. We want to first verify that we have a piece of land that we can take to the finish line and we know that we can build on. We run all of our comps to make sure that we have a competitive valuation when we exit, and then we want to make sure that those homes are not on the market more than 60 days. So we look for low days on market before we purchase any piece of property. I think she's going to save questions till the end. But if you guys have some due diligence questions, if you want to interrupt, you can at any time. The next thing is getting into the project calculator. So this is the true investment side. Majority of these spec homes, if we're building under 2,000 square feet, we can complete that within 6 months. So we usually need about 4 months to build. We need about 30 days to market and then 30 days to sell. That's why we give ourselves 6 months. We spent $58,000 on the lot, and again, 1.5 in closing costs, and the living square footage that we're going for is 1,800. If we're able to build at 110 a square, I'm gonna close this real quick. Sorry, guys. It is distracting me. Okay. If we're able to build at 110 a square, then we can build that house for $198,000 for 1,800 square feet. If we're building it cash, then we won't need to bring any hard money, but usually we do borrow hard money. Because of the cohort that Tanya and I are a part of, all of our builders automatically get access to vertical funding. So once we grab the capital from our investors to purchase the land, we are 100% guaranteed on our vertical financing because of the co-op that we're a part of. So if we added in the hard money for the whole 198,000, we pay 2 points in origination, and then we have a 13% APR with $650 in fees. That takes our $69,000 down to $52,350. It is still over the minimum 13% that she said that she wanted to make on a project. So the minimum that she wanted to take home is $46,800. This still achieves this with a difference of over $5,000. Still pay the realtor commissions, the 1.5 in closing costs. If we sold it at 360 and we use vertical financing, we walk away with 52,000. If there's a bidding war and we sell it for 370, we walk away with 61,000. And if we have to sell it under the asking price, even if we sold it at 340, you still see that it's a profitable deal. We pay back all debts associated with the project, and she still walks away with $33,430. $450. Sorry.
I have a question.
Yes.
Stania's like, oh God.
No. This is what it's about.
I'm listening to everything that you're saying. My first question is the 198,000 that it costs to build at 110 a square foot, and you said it was 58,000 for the land, right?
Yes.
So it's 58,000 plus the 198, right? So it was 2 something.
Correct.
Who paid for the land?
So in this scenario, Tanya would be asking you guys as investors to put up that money for the land.
Okay. So
And then we go to the bank for the vertical financing for the construction cost.
So my question is, I kind of built up to this, with that figure that what Tanya can make versus whatever you're going to sell it for, 360, 370, whatever, where is the, what's the word I'm looking for? Where is
investors return
where
at?
does it say, okay, the investor gets paid back right here, right? Where is that money at in that in number? That, you know what I'm saying?
So right now, this illustration is not showing an investor getting any type of rate of return. What this is showing is that if Tanya was to build this house, there is more than enough meat on the bone to not only pay off an investor, but also pay the bank off. So once she solidifies an investor, that's when she'll come right here and she will click investor money. So if she had an investor who gave her the 58,000 for the land and they charged her 20%, then she's going to now walk away with $46,550.
With the land at 58,000?
Correct. So she's paying off the $58,000, and then the investor is going to make $5,800 on their money.
Mm-hmm. But then how does that break into her bottom line profit of the 64,000 or the 63,000? You understand what I'm saying?
Well, it actually, now that she has to pay the investor $5,500, then now she's not going to make 52,000. That's why her return went down now to 46,500.
I see. Okay.
Yeah,
Right.
and then and if the investor was getting, let's just turn this to 35%.
Let's
Now you
just go with 50.
right. So now you see the investor is getting back 10,150, and now she's taking home 42,200. So
Gotcha.
it'll keep making the adjustments.
Okay. The other question I had, actually typed it into the chat. This software that you have, you type in the address into it and it just gives you all that information automatically, or what? Is it pulling from somewhere else?
No.
So remember, I was sharing with you guys that there's 177 builders that are affiliated with our cohort. All of us are using this exact same software. So when I come back over to my due diligence screen, it's not that it's pulling in all the information, but I can come here and I can hover and I can see that other people inside of our group has already done some due diligence in that area. So 6302 Kimrock, somebody has already verified that this area is a R5 zoning. Now, I still can go ahead and we provide all of the websites to go and verify it, but I can click right here. It'll take me right to the website, but it'll save me 3 minutes just by leaning on the research of one of the other builders already.
Right. Gotcha.
Make sense?
Yep.
All right.
Thank
And
you.
so we talked about one, the due diligence, just making sure that we vet this piece of land to make sure that it is 100% buildable before we move forward, or before we take any money from an investor, making sure that they're not buying a piece of land that we cannot do anything with. The second thing is the project calculator. The main point of the project calculator is she set a minimum net profit that she wants to make. So in this scenario, it was 13%. Now that she knows that this project is going to kick off a net profit of more than 13%, then we know it's a good deal to go bring an investor in on. The last thing is, we know we did a back of the napkin, $110 a square foot, but really, how does that break down and how do we send those numbers to the bank in order to get approved for our vertical financing? That's when Tanya is going to create her budget tracker. So her budget tracker really quickly is going to take all the information that she put in earlier, 1,800 square feet. She wants to build at 110, and it is going to put together a full budget for her. So when she puts together her budget, she will be able to print it, and she'll be able to send this to the bank. It's going to have all her site and soft costs, all of her structural costs, her MEPs, and her selections. And this is all going to be within the $110 a square foot. And this is based off of all the trades that we talked about that's associated with us. We're able to hard code in all of their prices per square footage. And then once we put in the exact square footage of the house, it takes those formulas and it kicks out every single line item for us. And so down to within a 5% contingency, we know exactly how much it should be to build this house. And I am going, if nobody has a question, I'm going to turn it back over to Ms. Tanya.
All right. All right. Let's see. So I'm going to share my screen again. And before I say anything, we will talk to Courtney or hear from Courtney. Thank you so much, Anthony. So we'll hear from Courtney. And Courtney is a previous and current investor, so she will share her experience with you guys, and you can hear that perspective. Courtney, let's see, have you unmute?
Can you hear me?
Yes.
All right. Good evening, everybody. As an investor, I started out in real estate, buying properties to rent out in Louisiana, and now I've gotten into investing. One of my original partners who brought the idea to me, I had a lot of faith and trust in him, and with everything that he had been doing prior to that. The reason I decided to go ahead and get in investing was when I was interested in real estate and possibly doing some flips or building or now wanting to build. But the investment side of it just made sense. I had a little extra money sitting in the bank. And all I was getting was what, 0.01% interest on my money. So it made sense to go ahead and take the deal that was presented to me. You get your investment back within 6 months if the house sells, which it usually does. And I reinvested that same amount over and over again. But the main thing is just putting your money to work for you. Like I said, it's usually a 6 month or less process that it takes to build a home. So you are making a pretty good amount of money for in just a few months, and you wouldn't even make in a year at a bank. So it was really just a no-brainer to take. It has been an easy process. You basically decide upon what you're able to invest, and at the rate that you determine with your builder. And then just to give an example, I guess you would say you base that on a 12-month interest. And if she bills less than that, then that's the amount that you would get for the amount of time that she would be using your money. But it's still a great resources. And it's just, you can't beat it. You're not putting anything into it. You're just sitting back and making the money. And so that's how I feel about it. It was something that if you trust the person, and I know Tanya, I've only known her for a short time, but just in dealing or seeing how she handles everything in her business, she's just definitely a trustworthy person, and she's a go-getter, and she will definitely take whatever you give her and make more. And so you will both benefit from her investment opportunities. But that's pretty much it. It is a really simple process to me. It's a no-brainer. You're letting your money work for you at a much faster rate than if you just had it sitting in a bank somewhere. Okay.
Awesome. Thank you so much, Courtney.
You're welcome.
So now, you guys, I want to open it up for questions that you all may have. And let's see, if you have a question, go ahead and unmute yourself. You should be able to unmute, and feel
Okay.
free.
I have
Nikki,
a question. Hi.
how are you?
How are you? I have a question. I know you said about the soil, like some people get land and then can't do anything with it.
Mhm.
Who does the soil analysis, or do y'all have someone to do that?
We do.
You have someone to do something? Okay.
Anthony, did you want to add on to that?
Yeah, so it all depends on what municipality that we're building in. So one of the things that we do on the front end as part of that due diligence process is we pull what's called a builder packet. Some cities require that you do what's called a soil test, in which they bore holes down in the soil to see if the soil is expansive or not, because this can impact your foundation. For the cities that require those, then that is going to be embedded inside of our budget. Okay. If a city does not require it, but our foundation guy recommends it, on the back end, then that's something that will come out of that contingency budget that we spoke about. But for the most part, I would say out of 10 soil exams, we probably have to remediate 40% of the time. Okay. Sometimes they'll tell us that we don't necessarily have to do soil injections. Sometimes we'll just have to add some piers to our foundation. So depending on what the engineer comes back and tells us to do, then that determines how much it's going to cost to kind of remediate that soil before we pour our foundation.
Okay. And one more. I want to give an example so that way you can kind of understand my question. I said about a little less than a year ago, I had found some land in Dallas County, and it was a half acre for 19,000. And I went to the guy that was helping me out. I guess he was a real estate. I'm not sure if he was an investor, but he was in the real estate. And I was on my way to hold the land and stuff like that. And by the time I even got to his office, I guess they was from California. He said some more investors came and bought it for like 10 times that amount. And in a way, I'm glad I didn't get it because it was a real bad flood zone. I guess my question is, have y'all gone through anything like that where someone just comes in and just zap it from you, spend the extra money for it?
Yes, all the time. And it sounds like that particular property wasn't an issue with the soil. It sounds like it was what we were speaking about.
Hmm.
It sounded like it was in a floodplain.
Hmm.
And I'm happy that you didn't get it either. Somebody